everyone. Thanks for tuning in. Just so you know, I'm not married to any stock or YieldMax ETF. I go where the numbers take me. Whoever pays me the most gets to be my favorite until someone else shows up with a better offer. Money talks, baby. That's my kind of romance. Perform? You're in my portfolio. Don't? Bye-bye. Blocked. Unsubscribed. Ghosted. Last week, I ranked YieldMax ETFs by their year-to-date performance. This week, I'm getting nerdy and a little flirty with numbers. Today, I'll compare some popular YieldMax ETFs to their underlying stocks. We're running two strategies: buy and hold the stock, buy the YieldMax ETF, and cash out monthly dividends. Let's find out which gives the juiciest returns. Quick favor before we dive in: like, comment, share, and hit subscribe. Help me reach 5,000 subscribers by the end of this month. Please? Pretty please? Also, I'm not a financial advisor. I'm a data guy, a number ninja, a math magician. So this is all just math, not investment advice. Here's the deal. I'm picking 5 stocks: PLTR, HOOY, SMCI, MSTR, NVDA, NVDA, along with their corresponding YieldMax ETFs based on these underlying stocks. PLTY for PLTR, HOOY for HOOY, SMCY for SMCI, MSTY for MSTR, NVDY for NVDA. We'll invest $10,000 in each stock and their corresponding YieldMax ETF. No hype, no hocus pocus, just math. Caveat: HOOY launched on May 6, 2025. So I'll invest in HOOY starting May 8 for an apples-to-apples match.
Let me walk you through one live. Let's take PLTR. Step 1, go to Yahoo Finance, search PLTR. Step 2, historical data, select year to date. Step 3, note price on January 2nd, 2025, first trading day. Step 4, note today's price.
All right, let's plug it into our table. And no stress, we're only entering 2 yellow highlighted cells. The rest, it's just formula magic doing the heavy lifting. So here we go. The price of PLTR on January 2nd, 2025 was $75.19. Let's pop that into column C3. Now fast forward to August 1st. PLTR is trading at $154.27. Boom. Let's drop that into column F3. Now, let's do some simple math. If we invested $10,000 at $75.19 a share, that's 10,000 divided by 75.19, giving us about 133 shares. Not bad, right? Now, those same 133 shares at $154.27 each, that's 133 times 154.27, which comes out to, drum roll please, $20,517.36. Ha! We more than doubled our money. $10,000 in PLTR on January 2nd is now worth over 20 grand. Am I surprised? Not even a little. PLTR has been hotter than a summer sidewalk in Phoenix. You with me so far?
And guess what? I ran the same process for all 5 stocks.
Yeah, I know. I really put Excel to work today. We've got PLTR, HOOY,
starting from May 8th, SMCI, MSTR, and of course, NVDA. You know the drill. Same steps we followed for PLTR. Historical price at the start, current price on August 1st, shares purchased with $10,000, then the total value today. And yes, you're welcome to double-check the math at home. I won't be offended. In fact, I encourage it. Just don't find any mistakes, or we're going to have a problem. Kidding. So let's take a quick look at what $10,000 turned into for each of these. PLTR, we already saw this one, from $75.19 to $154.27. That $10,000, it's now worth $20,517.36. PLTR is on fire. HOOY, starting from May 8th. Price on May 8th, $54.07. Price on August 1st, $99.90. Shares bought, $184.95. Current value, $184.76.05. Robinhood's not just for mean traders anymore. SMCI, start of year price, $30.05. August 1st price, $56.64. Shares bought, $332.78. Current value, $188,048.59. Supermicro, more like super money. MSTR, start price, $300.01. August 1st, $366.63. Shares bought, $33.33. Today's value, $102,220.59. And let's be honest, you're really just buying Bitcoin in disguise. NVDA started the year at $138.31. Now it's at $173.72. Shares bought, 72.3 tree. Current value, $102,560.19. That's a sweet gain. And still the king of AI hype. So what's the bottom line? You tossed $10,000 into each of these stocks at the start of the year, and today, every single one of them is dancing in profit. Some almost doubled.
Now comes the fun part. Let's compare all of these to their corresponding YieldMax ETFs. Do they hold up? Do they pay better? Or do they quietly underperform while promising high yield? Let's find out right now. We're running the same numbers for the YieldMax lineup. PLTY for PLTR, HOOY for HOOD, SMCY for SMCI, MSTY for MSTR, NVDY for NVDA. You already know the drill. 3 things, all highlighted in yellow. Starting price. ETF price on January 2nd, 2025. Current price. ETF price on August 1st, 2025. Total dividends received year to date. We're keeping it simple, just like we did for PLTR. Historical price at the start, current price today, how many shares we bought with $10,000, and what that investment is worth now. And yes, feel free to double-check my math. No offense taken. But there's one extra step here compared to the stocks. We also add up the total dividends received, which you can find right on the YieldMax ETF website. Let's kick it off with PLTY, the YieldMax version of PLTR. The price of PLTY on January 2nd, 2025 was $70.45. Let's pop that into column D14. Now fast forward to August 1st, and PLTY is trading at $67.73. Boom! That goes into column G14. Next, we head over to the YieldMax website, look up PLTY, and you'll see all the dividends paid this year. Add them up, and the total comes to $35.35 year to date. All right, let's do the math. If we invested $10,000 at $70.45 per share, that's 10,000 divided by 70.45, giving us about 141.94 shares. Not bad, right? Now, those 141.94 shares at $67.73 each, that's 141.94 times 67.73, which equals $9,613.91. So the value of our investment is slightly down,
But don't panic. The magic is in the dividends. We received $35.35 per share in dividends. Multiply that by 141.94 shares, and we've earned $5,017.74 in cash payouts. Let's drop that into column F14. Now, add that to our ETF value. $9,613.91 plus $5,017.74 equals $14,631.65. That's a gain of $463.65, just from holding the ETF and collecting that juicy income. We repeated this exact process for all 5 YieldMax ETFs. Plug in the values, let the formulas work their magic, and boom. We now have the total return for each. Market value plus dividends. The results? Well, now it's time to go head-to-head with the stocks. Let's see who wins the battle. Growth versus income. Stocks versus YieldMax. Place your bets.
Let's look at the side-by-side. PLTR versus PLTY HOOD versus HOOY, SMCI versus SMCIY, MSTR versus MSTY, NVDA versus NVDY. Drumroll, please. In all cases, buying the stock directly beats the ETF in terms of total return. Why didn't the ETF win? YieldMax ETFs are built for income, not growth. You get monthly income, nice, but you sacrifice price appreciation because these funds sell covered calls, so they often miss out on big upside rallies. Why didn't the ETF win? YieldMax ETFs are built for income, not growth. You get monthly income, nice, but you sacrifice price appreciation because these funds sell covered calls, so they often miss out on big upside rallies. Before someone yells in the comments, yes, I know, YieldMax ETFs go beyond just these names, but this video is focused on the most talked about tickers, the ones you watch. So, what's the final verdict? If your goal is total return, go with the stock. If your goal is income and cash flow, YieldMax might work for you. Just know what you're getting into. Hope this helps you become a smarter investor. If you like this breakdown, smash that like button like it owes you money. Subscribe for more honest, data-driven investing content. Until next time, keep investing smart and laugh a little while you do it.